Hi everyone, I hope you all safe and healthy with your family and friends. In this video, we are going to learn about 11th Standard Accountancy, Chapter 7, Subsidiary Books 2, Cash Book Illustration Sum 2. Enter the following transactions in a single column cash book of Pradeep for April 2017. Before we are going to enter the given transaction into the single column cash book, we have to prepare the title of the single column cash book, that is in the books of Pradeep cash book single column cash book. Okay, so we know the format of the single column cash book very well, that is debtor we have to write in the top corner, left and top corner, and the right and top corner we have to write the creditor. And the single column cash book format is divided into two parts, like ledger account, that is debit side has left hand side we called as debit side, which means a debtor, and credit side right hand side we called as a credit side, which means creditor. Debit side has 4 columns and credit side has 4 columns. Date on debit side we called as date but receipt LF amount rupees, and credit side, which means left hand side, also we have the debt payments LF amount rupees. Okay, let's see the transaction one by one. The first transaction is April 1, commenced business with the cash rupees 27,000. Just recall what is the journal entry for the commenced business with the cash account debtor to capital account. Where is cash account? Cash account is on debit side. So we go to debit side on the single column cash book. What is the opposite account from the cash account? Commenced business with the cash account debtor to capital account. So we go to debit side dated on 2017 April 1. The opposite account is Pradeep's capital account. So we always started with the word 2 on the debit side. So to Pradeep's capital account, how much rupees? 27,000 rupees. Then April 5, bought goods for cash. What is rupees 6,000? What is the journal entry for this? Purchases account debtor to cash account. Where is cash account? Shows cash account is on credit side. So we go to credit side. What is the opposite account from the cash account? Purchases account. Okay, so we go to credit side. 2017 April 5, always started with the word buy on the credit side. Buy purchases account 6,000 rupees. Okay, so you have to think on in another way, bought goods for cash, which means purchases goods for cash. So purchases means expenses, all expenses will be credited. Okay, so we credited the expenses account, purchases account. Okay, then come to next transaction. April 13, paid into bank 5,000 rupees. What is the journal entry? Cash account debtor to bank account. Where is cash account? Cash account is on debit side. What is the opposite account from the cash account? Bank account. So we go to debit side dated on paid into bank, right? So what is the journal entry? Bank account debtor. So because you paid into bank, your bank account increases, your cash account decreases. So the journal entry is bank account debtor to cash account. So where is cash? Cash is on credit side. So we go to credit side. What is the opposite account from the cash account? Bank account. So on 13th April, buy bank account 5,000 rupees. So you have to think in another way. Paid into bank means payment. Okay, so you go to payment side, that means credit side. What is the entry? Buy bank account. Okay, let's see another transaction. The next transaction is January 14, goods sold to Sangeeta for cash rupees 9,000. So what is the journal entry? Sangeeta account debtor to sales account. Whenever you generate the goods sold to Sangeeta for cash means cash account debtor to sales account. So where is cash? Cash is on debit side. So you go to debit side in the cash account. What is the opposite account from the cash account? Sales account. Okay, so on January 14, 2 sales account, how much rupees? 9,000 rupees. In another way, you can think in another way, goods sold to Sangeeta for cash, right? So, when you generate sales, you receive the income. So, you go to receipt side. Received the income means you go to receipt side. 14th to sales account 9,000 rupees. Okay. Then January 17, goods purchased from Preeti on credit. Listen this transaction. What this transaction tells us? This is the credit purchases. Okay. So credit purchases won't enter into the cash book. So we omit this transaction. Let's see the another transaction. That is January 21, purchased stationery by cash rupees 200. So what is the journal entry for this? Purchased stationery means purchases goods, which means the expenses. All expenses will be credited. Okay. So purchases account data to cash account. Right. So cash account is on credit side. So you go to credit side, which means payment. January 21, by stationery account 200 rupees. Okay. So purchases means expenses, payment. You made the payment to buy the stationery. So your cash account decreases. You have to credit the cash account. So by stationery account 200 rupees in the payment side. Okay. Then the next transaction is 25, paid Murugan by cash. Paid means payment. In simple way, you can think paid means payment. You can enter into the payment in the payment side by Murugan account 14,000. Okay. In simple way, you have to write 2017 April 25 by Murugan account 14,000. In another way, you can think paid Murugan by cash means what is the journal entry? Murugan account data to cash account. So cash account, where is cash account? Cash account is on credit side. So you go to credit side on the single column cash book. What is the opposite account from the cash account? Murugan account. So you have to write by Murugan account. 14,000 is entered into the payment column. Okay. Then April 26, commission paid by cash rupees 700. What is the journal entry? Commission paid by cash means commission account data to cash account, right? Where is cash account? Cash account is on credit side. So you go to on ledger account, you go to credit side. What is the opposite account from the cash account? Commission account. So you go to credit side, dated on April 26, by commission account 700 rupees. In other way, you can think commission paid means payment. Okay. So you go to payment on the single column cash book, write the by commission account 700 rupees. Okay. Then come to the next transaction, 29 April 29, that is drew from bank for office use rupees 4,000. So what is the journal entry for that? Due from bank means cash account data to bank account. So what is where is cash account? Cash account is on debit side. So you go to debit side. What is the opposite account from the cash account? Bank account is the opposite account from the cash account. So on April 29, to bank account 4,000 rupees you can enter into the amount column. In other way, due from bank for office use means received. You received the cash. You withdraw the cash means you received the cash 4,000 rupees. So you go to receipt side, debit side, and to enter 29 April 29 to bank account 4,000 rupees. Okay. Then April 30, rent paid by check rupees 3,000. So you paid rent through bank. Okay. So you can't enter this transaction into the cash book because this is the bank transaction. Only cash transaction only you have to enter into the cash book. So you have to omit this transaction. Then come to the, we entered all the given cash transaction into the single column cash book, receipt and payment side. Then you have to find which side has the higher value, always in cash book, always debit side has the higher value. What is the amount? 51,000 rupees. So you have to enter that 51,000 rupees as a total on the both receipt and the payment side. Okay, then you have to find the lesser value side, that is in on lesser credit side as the lesser value. How much rupees? 25,900 rupees. So you have to subtract it 25,900 from 51,000. You will get 25,100 rupees. So you have to enter this differences into the lesser side, which means credit side. Okay, again this you have to write the balance carry down. The difference is to be placed in the amount column of the lesser value. Okay, so balance carry down is to be entered into the payment column, payment side, against the differences, and the date column, the last date of the accounting period is entered. The last day of the accounting period is April 30. So then the differences has to be brought down to the opposite side, will be entered below the total. Okay, then the balance brought down is to be entered in the receipt column against the differences, and in date column the first day of the next accounting period is entered, which means May 1 is the next first day of the next accounting period. This is the opening balance of the cash book. So we prepared the single column cash book. Thank you. Do you have any doubt? Please comment it on the comment box. Take care.